Hey guys, this is Alex from MarketWise Asia. Today it is the 30th of December 2022. It is the last trading day for the year. So let's go through with you what are the top performers in the S&P 500 for this year and also the worst performers for the S&P 500 as well. So before I get started, a disclaimer first, whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. Alex could be wrong, so please do your own due diligence. So before I go into the topic proper, I also go through the market updates and also the review of the market, etc. Just to let you know that recently I am more active on Twitter. So you can follow me on Twitter. My handle is twitter.com/alex_yo. Alright, if you are watching this on YouTube, you should be able to see all the links I posted here on the description box, and if you're watching on Facebook, you should be able to see the link in the first comment of the post. So this is my Twitter over here. Alright, so as I mentioned, I'm more active on Twitter recently, so I post something a bit different from the usual Telegram channel. So for example, over here you can see that recently I posted FAN. FAN is the wind energy ETF. Recently I posted on the 22nd of December. I say that price is above the cloud, above the central pivot range, and for the past 10 years, 90% of the time it closed positively in January. 90% of the time it closes positively in January, and you can see that actually FAN actually started to move higher after I posted that on Twitter. Of course, I'm not asking you to copy me. I'm just sharing with you some trade ideas, that you might not know. So please do follow me on Twitter. And for example, recently I talked about the Tesla as well. So I said that Tesla, my potential star signal is showing up. There could be a technical bounce, and also talking about is it Apple? Yeah, recently I talked about Apple and such. Apple, I think somewhere below over here. Yeah, but nevertheless, do follow me on Twitter. So I post something different. And once again, the link is over here. Please do follow me, and also do subscribe to our Telegram channel. Alright, MarketWise Asia, and also the YouTube channel. If you're watching this on YouTube, please like it, smash the like button, and also subscribe to our channel. And one last but not least, before I go into the topic proper, the Market Insights Virtual Summit is coming on the 14th and 15th of January 2023. So this is the link over here, right? This is what you should be seeing on the page. So do register now. It is free. Just click the first name, email, and mobile. You are good to go. We have a few keynote speakers, like Ray Barros, Mr. Lu Shengchuan, and some of the resident and new speakers as well. And of course, this is the new year, new outlook, new opportunities. As we are gonna heading into the new year, what is the market outlook? What is the trading strategies, the investing strategies that you're going to do? Let these market experts share with you their game plan, their trade plan, their investment plan for the new year. And once again, it is free. Do register now. And not only that, you get to participate in our lucky draw. As long as you register, nothing to buy, you stand a chance to win, and also get this free access to this report. That's only exclusive for the people who registered, right? The key sectors and industry to watch the seasonal stock market trend for the first quarter 2023. Plus the free bonus video. Alright, so if you like, for example, my post on Twitter talking about the FAN ETF, so these are the potential things that could move in 2023, right? Then you like this report, because this report will share with you what are the key sectors and industry to watch. Of course, I blurred it out here. You can't see it, but once you register for this event, you get access to this report. So please register for this event. And so I think that's all for now. So let's head over to the market right now. So you can go over to slickcharts.com, and what are the best performers and the worst performers this year in the S&P 500. So go to slickcharts.com. So this is the link over here, and go to this S&P 500 over here, and then go to components performance over here. All right. they can see over here. Okay, the first one, this Gen Digital. Okay, all right, something is not right. Okay, so can ignore this. Okay, the best performance in the S&P 500, the top three is actually all energy sector, Constellation Energy, okay, Occidental Petroleum, OXY, and Hess Corporation. So Constellation, year-to-date return 132%, okay, Occidental 100%, okay, and Hess Corporation and 87.28%. Okay, so make a guess, okay, which are the worst three performers in the S&P 500 year-to-date. Of course, you know, today's last trading day. This is updated until yesterday, 29, but I think, you know, the numbers should remain the same, the name should remain the same. So which are the worst performers over here? Okay, the worst performers, make a guess. Okay, you head down to the bottom. All right, the worst performers is actually, okay, Generac Holdings. All right, year to date is down 72%. Match Group, this is, you know, the dating app. All right, it is down 70%. Align Technology, 69%. SVB is the regional bank, down 68%. And our all-time favorite, okay, Tesla is at the bottom as well. All right, this year to date, it is actually my cursor is not doing very well. Okay, never mind. It's down 68% year to date. All right, so you can head over to this slide, to this side over here, to have a very quick glance of what is the best and worst performance for the year. But okay, if you want to have, you know, another alternative that you can do some sorting and such, right, you can go to Finviz. Okay, finviz.com. Finviz.com. I share with you over here, finviz.com. All right, and then you go to the screener over here. Okay, and under the sector over here, no, so not sector, under the index. Under index, you choose S&P 500. Okay, then you sort for you, and then you go to the performance tab over here. All right, and then the performance year to date, you can sort it from the lowest to the highest over here. All right, so you can just click one more time, and then you'll be able to see that, you know, the top performance over here. So once again, I zoom in, you can take a look. The first one, then you can go to overview, back again, overview. All right. Okay, then see that the top 10, all right, mostly are from energy, and utilities is Constellation Energy. All right, and then only one in technology. It is not really tech, but more of the solar industry. So this is the first solar year-to-date return. Okay, all this you can see from Finviz as well. So now you know where to find the best and the worst performer in the S&P 500. So I hope that this is useful to you. So let's head over to the market right now. So let's take a look at the S&P 500. So what is the market doing? Okay, so for those who are new to MarketWise Asia, you know, on my default chart, I have the Ichimoku cloud and also the central pivot range. So if you don't know what I'm talking about, not to worry. You know, in the new year, you know, start to follow me on Facebook Live, and you'll know, you know, how I do with the central pivot range and also the cloud. So, but for simplicity's sake, okay, the cloud is just to you know, tell us the trend at a glance, and the central pivot range, which are all these green dotted lines over here, the three green lines, these are the support and resistance zone area. Okay, can? All right, so you know, no change in my actually not much change in what I mentioned last week on my video on the S&P and also the other indices. We are still overall in a downtrend. If you switch to a weekly time frame, all right, we are generally, you know, still in a downtrend long term. Okay, Nasdaq, it is the same. We are long-term downtrend. Okay, Dow, it is the same as Dow is still downtrend, but it is the strongest among the three. Can you see that for Dow, we actually try to, you know, once price broke below the cloud, we are trying to break above the cloud, and then price come back down to the cloud support area again. Okay, but I normally look at the S&P and the Nasdaq as well. Okay, so this is the weekly time frame. On the daily time frame, okay, all right, we are still below the cloud and below the central pivot range over here. Okay, below the cloud, all right, below the cloud, below the central pivot. So generally, you can say that, you know, the bias is more towards the bearish side. So this year, the Santa Claus rally, you know, it sort of didn't come, or rather it came late. Yesterday was a very good rebound over here. Okay, yesterday it was up 1.69%, but generally you can see that, you know, for the past 1 or 2 weeks or so, we are stuck in this price range over here, and the Nasdaq is down. Okay, much worse. Okay, we are somewhere near back to the swing low in October, very near there. Okay, and yesterday was a huge rally in the Nasdaq, was up 2.41%. Let me try this. Okay, better now. 2.41% was up. Okay, all right. So I don't know about you. Are you still bullish or bearish coming in January? Okay, all right. But okay, just want to let you know that certain things that I'm pointing onwards. Okay, so like for example, Nasdaq based on the you know, daily time frame. Actually, I do have a kind of I can't do that over here. I do have a star signal in Nasdaq over here. So star signal is my proprietary reversal signal over here. So there's a star signal coming out in Nasdaq. So there's potentially, it's not confirmed that heading into the new year, at the start of the new year, we could see a rebound in the Nasdaq. And if the Nasdaq could move higher, then, you know, the S&P 500 and the Dow might bring along with them and move higher as well. And also on the VVIX ratio over here, okay, based on my, you know, signal again, there's a potential reversal signal over here, which means that, okay, you know, this could, you know, bring the indices to go up as well. Okay, if you look at the comparison between the S&P, okay, and the VVIX over VIX ratio, can you see that they actually, you know, move in tandem one. Okay, up, down, move in tandem, they move in tandem. Okay, they move in tandem. So if the VVIX over VIX ratio start to go up, okay, I believe that we have some upside to go over here. Again, this is just my opinion. This is a reversal signal on the VVIX ratio over here. So overall, I think I am bullish, okay, at the start of the year. Okay, and the reason why recently, you know, the market, it is, you know, like for example, the S&P, it is down recently, is down. On the Nasdaq, you know, it is down because, okay, the heavyweight, the blue chip stocks, okay, in the Nasdaq and the S&P 500, like for example, Amazon, Microsoft, and Tesla, all these are coming down. So you can see that, go back to slickcharts.com, all right, go to S&P 500, the weight analysis over here. Okay, you can see that the top 50 companies carry about 50% of the weight. So go to S&P 500, the companies, is it this one? Companies over here. Can you see that Apple, Microsoft, Amazon, and Apple itself have about 6% weightage on the S&P. Microsoft about 5.5%, Amazon 2.2%. Okay, where is it? Tesla. Where's Tesla? Tesla, okay, it is about 1% also. Okay, so for example, recently, like Apple, it is very weak. AAPL, Apple is very weak. So that's why it is dragging the S&P and the Nasdaq as well. And of course, you know, Amazon is not still, like, you know, not doing very well, coming down also. Nasdaq. Okay, of course, our beloved Tesla, a lot of people are watching Tesla. It is, you know, coming down all the way. Okay, but again, once again, you know, my reversal signal star signal is showing that there could be a potential bottom in Tesla. Okay, and price started to move higher up. Okay, for the past 2 days, This is what I've been stating on my Twitter, right? For example, my Twitter over here, Tesla. Okay, I posted this on the 28th of December. Okay, near a vertical sell-off, but my star signal is showing up. Okay, again, there could be a technical bounce. Okay, once again, I'm not saying that it could be the change of trend. I'm just saying that, you know, moving forward, the Tesla could be moving higher. Okay, what is the magnitude? I do not know. Okay, it could come down, go up a few more days, and then price come back down again. I do not know, but at least, okay, I think there could be a short-term rebound. All right, Google, it is also showing some potential short-term rebound. And what else? And I think it's also Apple. Okay, it is also showing a potential short-term bottom, and that could go up higher as well. Once again, I do not know what is the magnitude. Price could go up a few days, could go up 1 week, could go up 2 weeks, 3 weeks. I do not know. Okay, price could go a few days and then come back down. I do not know. So I'm just telling you that there could be a short-term bottom. The short-term bottom, I do not know the magnitude of how high it can go, but you need to understand the context. But overall, we are still in a general downtrend, as I mentioned earlier at the start of the video already. Okay, but of course, looking at the let me move this. Looking at the indices, it look pretty scary, right? Okay, wow, we are near the bottom, and actually, in fact, I am watching on Twitter, you know, the FinTweet community. A lot of people are actually quite bearish on the market. Okay, some are, you know, anticipating that we could have another leg down in January. Okay, in the new year, and S&P, we are also, you know, going to come down further. Okay, once again, I do not know whether the market can head down lower. Okay, I seriously do not know. I'm a swing trader, so I swing trade from a few days to hold, from a few days to at most 1 to 2 weeks. Okay, go long, go short, it is fine. I still can make money. All right. So, but if you are holding on a longer term time frame, okay, now I think, as I mentioned, now might not still not be the best time. We are still below the central pivot range and cloud. Okay, all right. But okay, this is because you are looking at the main indices, the S&P, the Nasdaq 100, and the Dow. But if you are looking something different, okay, the equal weight index, okay, then it is actually not that scary. Okay, equal weight, which means that, okay, for all the companies in the S&P 500, we're just putting equal weight, like, you know, 100% divided by 500 is just 0.2%. So we are giving equal weight. Unlike Apple, we have about 6% weightage. So if you're giving equal weight, okay, all the companies is only about 0.2%. 0.2, all 0.2, 0.2, 0.2. So equal weight. Whether you are the biggest company or the last company in the S&P, the smaller one in the company, okay, we are given equal weightage. All right. So if you given equal weightage, all right, this is the RSP. This is the RSP. Okay, RSP, ETF. Okay, the equal weight ETF. You can see that actually it is not that scary, right? We are still way above the swing low in October. We are still way above that. Okay. So there's a potential chance, okay, that price can go higher. Again, this is based on my, you know, analysis on the Nasdaq, on the VVIX ratio. It formed a reversal signal to me. So I think early January, I think the market could go up higher. Okay, again, this is just my personal opinion. I could be wrong. Again, I could be wrong. Okay, all right. But looking at the equal weight, things are not that scary. Okay, things are not that scary. All right. And if you look at the Nasdaq 100 equal weight, the equal weight one is QQQEW, QQ equal weight. All right. Again, it is actually not that scary. Right. So we are still far away from the swing low over here. It's still holding pretty well. Price trying to, you know, break down below the cloud, but stage a rebound over here. So let's do a comparison over here. Let's do a comparison over here. Okay, so let's do like that. So on this chart, I put the normal QQQ, okay, the Nasdaq 100, okay, and then here I put the QQEW. All right, can you see the difference over here? Okay, so for the Nasdaq 100, the normal indices, we are somewhere near the bottom of the low already. But for the equal weight, we are still pretty far away. So I think price, the market is still not as bad as it seems, at least for now. All right, so you can see that there's a stark difference over here. Of course, don't talk about the recession or the macro outlook and such. Okay, moving forward into the new year, I think the chances of a recession is pretty high. But before, okay, the neighbor can announce, NBER, the neighbor can announce that there's a recession. Okay, and that could be still some time away, some months away. I don't know how many months, 1 month, 3 months, 6 months, 9 months. Okay, before this period, the market can do a lot of things. Okay, so you need to take advantage of what it is doing right now if you are a swing trader. So if you are a swing trader, okay, focus on the price. Don't look at the macro view. Okay, swing trading, holding for a few days to at most 1 to 2 weeks. Okay, the macro outlook, it is not that important. You still can make money going long or going short. Of course, if you are doing position trading, you still can look at the price, but hold your horses. Okay, wait for price at least to go above the central pivot range. Okay, then you might consider going long. Okay, so this is my outlook for the year moving ahead. Okay, as I mentioned, the big cap stocks like the Apple, Tesla, Amazon, all these, they are being sold off at the end of the December. They are a bit overstretched. They're a bit overstretched. Okay, they are a bit overstretched. So if you overstretch over here, then there's a snapback, a technical rebound. It is definitely possible. So moving into early January, I think the market possibility can go a little bit higher. Okay, this is just my personal opinion. All right, I think with that, I shall end this video. So I wish you a very happy new year, and I will see you guys again next year very soon, in just a few days time. Okay, enjoy your holiday and goodbye.